Welcome to 360 Money Matters, where financial planners Billy and Andrew talk all things financial planning. This podcast aims to increase your knowledge and confidence with all things money. Each week, they will cover topics like wealth creation strategies, investment principles, creating passive income, paying off your debt faster, and much, much more, so you can live a life on your terms without limits.
Hello and welcome back to another episode of the 360 Money Matters podcast. I'm Billy and I'm joined by my co-host, Andrew.
Billy, we're back again for another episode.
We are always back week in, week out, Andrew. I'm pretty excited to be here, mate. It's been a while between drinks for us with a guest speaker, so we're pretty excited. We're pretty buzzed about this.
Yeah, absolutely. Absolutely. Always good to have someone sharing the studio with us.
Enough of us talking. Let's introduce Brenton Oviss from Howden Insurance Brokers. Brenton, how are you going?
I'm good, thanks, guys. Thanks for having me.
Good to have you onto the podcast.
Yes, here to speak about everyone's favourite topic, insurance.
Yeah. We'll try and make it as exciting as we possibly can. But do you just want to introduce yourself and tell us a little bit about Howden and the services that you guys have got over there?
Yeah, absolutely. As Billy mentioned, I'm part of Howden Insurance Brokers Australia. We form part of Howden Group based out of the UK, which forms one of the largest insurance brokers out of the UK and Europe.
Fantastic. And so mainly, is it just general insurance? Are we talking about life insurance? What type of insurance?
We specialise in commercial insurance or general lines of insurance. So we have a vast array of services, a breadth covering off from people risk services. We do specialists in financial lines, commercial and affinity, private client services, corporate risks, alternative risk management, and risk consulting. So there's a fair few there that we cover off.
Tick all of the boxes by the sounds of it. But look, from a really simplistic perspective, and maybe for some of our listeners that haven't had exposure to insurance brokers and what they do, I mean, it sounds like there's an absolute minefield of insurance products and risks to cover. But can you just run us through generally what insurance brokers do and how they can help a client with their insurance needs?
Absolutely. So we're seeing there is a common trend at the moment that there's a lot of insurers trying to place directly. You would see advertised on the TV, a lot of the large insurers being like the likes of Allianz, GIO, targeting SME type of clients. The problem with this is whilst some of the products are okay, and their policy wordings are quite broad, the individuals don't actually have the knowledge about what type of cover to take up and how to calculate their business interruption, their property assets, etc.
So really, I mean, from what it sounds like, everyone always thinks broker, you're looking at, lowest common denominator, what's the cheapest price and, what's the best deal that I can get on my insurance. But sounds like there's a little bit more to that, especially when you're talking about the business insurance side of things.
Absolutely. And I've reviewed multiple policies that have come forward to me from people that have placed products to the direct market. And in some cases, they're not even worth the paper that they're written on, unfortunately. And that can be from a range of things. They're not even declared their business occupation correctly. They don't know how to calculate what their annual turnover is. They don't know how to calculate what their business interruption, their gross profit looks like. So whilst they may think that they're taking up a product which is cheap, it may end up being cheap and nasty. And in the event of a claim, the policy's not going to respond in the way that they want it to. So that's where we then come on board. And that's when we'll do an in-depth review of the individual, their business, their requirements and their insurance needs. Then we go out to market. So then we'll actually approach an array of different insurers that are best aligned to that individual business to see who offers the best coverage for the best premiums.
Yeah, and I guess it's one of those things, and we sort of have a similar approach with, I guess, the personal insurance that we place as financial planners. But with something like this as big as your business, getting that wrong, I mean, in conjunction with maybe saving 5, 10, 15%, I don't know what the number is, but saving a small amount of money on a premium from a cash flow perspective, thinking you've got a particular type of coverage, then going to make a claim and realizing, oh, geez, this is not where it needed to be and not covered, that premium saving and that decision-making process that you went through is really a point and a waste of time. So we encourage people all of the time, especially with clients that, we're referring across to you and things like that, is premium is really a secondary or a third consideration, and it sits further down the list. It should not be your primary driver when you're looking at this, because the product that you're selecting, the strategy that you're trying to enact, and the things that you're trying to cover are much more important when it comes to, I guess, insurance in general And that's been an approach that we share right across both of our businesses and our philosophies.
Correct. Yeah, absolutely. I couldn't agree more.
Yeah. And look, I mean, I guess, sort of tying it back to really, financial planning and wealth creation, I think from my perspective, the real value that we see out of it is what you want for a client is to really have a solid team around them. And I think that most people recognize that, you need a financial advisor to look at your wealth creation. You need an accountant to look at your tax strategies. You need a lawyer to look at, property purchases and all of that stuff. But there's really a need for an insurance broker there, especially when you're talking about self-employed. And, we'll get into it in a second about, some individual clients and how you can help them. But especially when you're talking about self-employed clients and people that own a business, the importance of making sure that you've got the right products is just imperative. So, I mean, tell us from a business side of things, what are the type of, insurance products? What are the type of things that you're protecting when you're looking at, general insurance for a client? Because sometimes it's one of those things that you don't know what you don't know. And sometimes people just really don't know what's out there and what you need to make sure that's covered.
Yeah, well, it's a great question and a very broad question. If we can narrow it down, people's first mindset and their first thought process always leads back to insuring their property and their physical assets, which is fantastic. You're always going to have to protect those physical assets that you've put a lot of hard-earned money into. But then we also look at alternatives to that. And secondary to that is a consequential loss, so a financial loss. And I've mentioned it a couple of times, being business interruption and how important that is. So essentially, to break down business interruption very simply is if you do have a claim resulting from a fire or peril, business interruptions are going to be triggered. And that's going to cover your loss of downtime, your loss of trade. And we're seeing a vast array of clients not properly insured. And that's for multiple reasons, mainly because they haven't calculated it year on year as their renewal comes about. That BI calculation is leading back to when the policy was first set up, and it's just continuing to roll year on year. So there hasn't been an annual review conducted by the broker. And then unfortunately, the clients just don't know that they do need to recalculate that every year.
From that instance, I mean, just thinking about our own business, and I'm leaning more so towards if there's a physical operation and you kind of think of like a flood. We'll talk about what's happening in the northeastern area of Australia and stuff, but that's fairly obvious. But I guess you really need to lean into an insurance broker because you don't know what you don't know. And there's probably stuff that as business owners, we wouldn't even think about. You really need someone with your expertise to be able to point that out to us.
If we reverse engineer it, a lot of the times we'll see people over-insuring their consequential loss, their financial loss. What I mean by that is if you look at a lot of office risks, like the office that we're in today, if there was something that happened here and you guys couldn't trade, and we've seen it before, you're all able to work from home. So you wouldn't actually go back and insure your full 12 months gross profit amount because you'd be up and trading again within a couple of months. You'd be working from an alternative office space or working from home. So you could be overpaying and overinsured.
Yeah. So really, I mean, I guess one of the things that you're also doing is not only advising on the right types of products, but making sure that, it's specific to the business and it's specific to the person that you're advising or the entity that you're advising on in terms of the amount of insurance cover that they need to make sure that it's not going to make you don't want insurance to make you, a huge profit. You want insurance to really just cover what your loss is going to be if the worst was to happen.
That's right. And it's finding that balance. And that's what a broker can essentially do for you, is having those really in-depth conversations, getting a good understanding of the business, what your risk exposures are, and then just getting the right levels of cover for the right premiums. And also, it's worthwhile mentioning excesses as well. So excesses do play a big part in there too. And if we look at excesses, people pay on average $750 for car insurance excess. If we look at our property insurance covers, they kind of start at $250 to $500, and they're very rarely claimed against compared to motor vehicle insurance. So why wouldn't you look at increasing your excesses on your properties to reduce your premiums? Food for thought.
It makes sense. And look, on that note, how do you strike the balance between choosing the right excess and the amount of premium that you pay, right? Is there a mathematical calculation that you go through as a broker, or is it just kind of trying to find this balancing point between the two where the client that you're dealing with feels comfortable? Because, It's always something, whenever I'm renewing my insurances, it's always something that I'm pushing back against and going, okay, the likelihood of me making a claim, therefore I can increase the excess. I mean, how do you go through it when you're doing that for clients?
So a key point you mentioned there is claims, and that's from reviewing a client's claims history. So in the placement of any insurance policy, we need to declare claims to the insurers, whether that be on an annual renewal basis or for new business placements. So if we see some claims trends there, insurers automatically will apply their own excess structures. That's going to be them trying to mitigate any potential outlays in the event of large claims. But from a broker's perspective, if we look at a client that doesn't have any claims history, rather than going in with the minimum excesses to have the higher premium, we'll give multiple options. So we might go in with 3 different levels of excess structures against premium outlay, and then the client can then come up with what they think is the best fit for them.
Which makes sense, and at least that way they can sort of assess that against their own cash flow. Yep.
Should your insurances all be with the same provider? I mean, is that, any benefit? Does that make things any easier? Should you spread your insurance across multiple providers? I mean, or is it just a matter of what it works out for the client? I mean, what's sort of your thought process around that?
Yeah, no, fantastic question. We do like to, if it's we look at a whole of account solution, it does work to our advantage to go to the same insurers with all lines of insurance to try and get the best premiums. Now, but in saying that, some insurers specialize in different sections of insurance. So if we look at property and liability, they do usually go hand in hand, and most of your large insurance players do offer both liability and property cover. But then there are some really hard to place type of risks who some insurers and vice versa will offer property, but they won't offer liability. Or if they do offer liability, for example, it might be very expensive. So that's the role of the insurance broker, to go to the right markets to make sure that we're getting the best coverage for the best premiums. So in a nutshell, yes, first and foremost, we would like to keep all lines of insurance with the same insurer, but it's not always going to work out that way. And we do always end up tending to break away the property insurance and then keeping all other financial lines of insurance together. So whether that be professional indemnity, management liability, and others.
Really good explanation. I've always wondered around your renewal process. So every year when our insurance is due for a renewal, we get you to have a look at the renewal notice that we get. What's the process that you go through with determining whether or not, yes, it's competitive, yes, we're happy with that, do we stay, do we go, do we up the cover, do we down the cover? Can you just talk us through a little bit about what that looks like?
Yeah, well, the renewal process is a big bugbear of mine, not for our own internal purposes, but what I see with our competitors. They tend to get very lapsadaisy with the renewal process. Once the policy's been placed, they've got their first year's worth of commissions. They'll just roll over those policies year on year. And that's not always a bad thing if you're staying with the same insurers. I'm not saying that we need to look at remarketing an account every year, but it's just a matter of having a conversation, a pre-renewal conversation with our clients at least 6 weeks out to renewal. Most insurers don't actually offer insurance renewals up until 4 weeks at minimum. So we usually like to start it at 6 weeks, having that pre-renewal discussion. And that's just going through any changes to the business. As I mentioned earlier, turnover. So that's a big rating factor against the liability policy. Also staff numbers as well. And, we'll go back, and it's the first question we ask when we get a new policy to be set up. We say, what's your current turnover? It's currently listed as X on your expiring schedule. And they go, oh, well, it hasn't been that for 3 or 4 years. And we're like, oh, well, has your broker not had a conversation with you? And very common, they'll say no. And it's just rated again on that expiring turnover, which has been put there from inception of the policy. There's a couple of issues with that. If the turnover is not correctly declared along with staff numbers, you might be overpaying if the turnover is too high, or if it's underdeclared, the insurer may have the right to refuse a claim.
Yeah, so pretty significant consequences if that's not done correctly. So understanding the business as part of the renewal process, tick all of those boxes, figure out, are we looking at the right type of information? Has the circumstance or the business changed? And then once you've got that and you're comfortable that you understand the insurance requirement, what do you then do from there? Do you go to the existing insurer first and foremost and have a look at that, or what does that look like?
Yeah, absolutely. So we do like to leave a policy with an insurer for at least a minimum of 3 years. The reason behind that is they've got 3 years of your premium collection. So in the event of a claim, if there's a large payout, it's not going to have such a significant impact as far as renewal premiums skyrocketing post those claims. But in saying that, premiums are going up across the board everywhere. So that is part of an insurance broker's job, is to remarket those accounts when they need it. So general rule of thumb, we're seeing property premiums go up by an average of 10 to 20% as standard. Liability insurance has kind of remained stable. But, as soon as we get that indication from the existing incumbents, they're going to have an increase or a significant increase, then that's when we would look at remarketing that account.
In terms of what you're doing from a day-to-day side of things, is it only around clients that own a business and are self-employed? Is there any sort of products or services that are available through a general insurance broker for, your PAYG clients? Is there, anything on that end of things?
Yeah, so as I mentioned earlier, that we've got quite a large breadth of services that we do offer. So I specialize in the commercial and affinity space. Affinity, the word gets thrown around a lot in insurance, but not a lot of people understand what that means. And that essentially, if I can break it down quite simply, is we will partner with a group or an association or a buying group and come up with a tailored insurance program for their association or their member group. And that's a benefit to them because we, again, get a really good understanding of that association, what their risk exposures are, come up with a tailored product, and then it also looks back to the membership organisation as an employee benefit. We break it down. So an offshoot to that is always going to be private client services. So that's protecting your own individual wealth or assets. So that would cover off all your property assets, investment properties, holiday homes, boat, caravans, vehicles, and they can come up with a package product for you. And the benefit of that, again, is making sure that it's with the right insurers. They're going to offer the right levels of cover for you. The products are out there, there's significant gaps within their coverage. And if you do have exotic vehicles and things like that, it's tough premium-wise. But these guys are specialists in this field. They've been working in this industry for a very, very long time. They know the right insurance markets to go to straight away. So it really just takes away the hassle of you having to go online and try 5, 10 different insurers to try and get the right premiums for the right coverage.
And I guess the other thing too is, maybe different for us because we play in the insurance space, but you're not going to know what you don't know. Like, are you going to sit there and trawl through product disclosure statements and then compare policy definitions from, the 3 different insurers that you look at? And the truth is most people that go direct, and, I fall into this category sometimes as well, you look at the premium and you go, these guys are the cheapest, so I'm going to go with them. And it gives you a level of comfort, I guess, initially, but you don't really know what you're not covered for until you make a claim. And if it's something significant like, real assets like a property, you don't want to be caught out. And just thinking through sort of previous examples, and probably now with all of the rain and stuff that we're experiencing in Queensland and northern New South Wales, just having something as simple as a flood definition on your policy, if you don't have that, you're not covered in a real simplistic term, but if you do have it, maybe you are covered. And that one wording or policy definition could mean the difference between you being financially ruined or not. It's just incredible.
Yeah, absolutely. And again, that's your broker's job, is to explain that to you in layman's terms, whether it's covered or not reading through a policy wording and, trawling through pages and pages of documents trying to find whether you're covered or not, and going through ambiguous wordings. They'll very, very clearly tell you if it's covered or not. And again, that's our job in Queensland and the floods. And I get this question quite a lot because the disasters that have occurred in Queensland over the year in insurers, majority of the insurers are running at large losses as it is. So it's very uncommon that you can actually even purchase flood insurance if you're a Queensland risk, unless you're in a high rise or maybe central Gold Coast in an upscale area. Unless you're in one of those type of scenarios, it's very, very unlikely that you're going to be able to purchase flood cover.
Geez, I didn't know that. Obviously, the risk is too high and they just take it off the table.
Correct.
Wow.
Are there any sort of differences in terms of what's available to the market through, an insurance broker or someone such as yourself and someone that's going direct? Are they the same policies and what you're doing is sifting through the debris and kind of trying to find the right policy? Or is there a difference between what you're able to offer versus what's available sort of direct to market?
Yeah, so we're quite lucky. So we're part of the Steadfast network. So Steadfast is fantastic. They have agreed policy wordings. So it's quite very simplistic for us. We can put together a submission to a panel of insurers that we have agreed policy wordings with. So we'll put forward our submission and then we receive our terms back. We'll then get a very clear understanding from those insurers whether A, that they can offer cover to that particular risk, first and foremost. Then they'll come back with, if there's any exclusions, then they'll come back with what their premium options are, what their excess structures are. And then essentially from there, if we narrow it down, say if we come back with 5 insurers that are all very similar, we'll then go back to what's the cheapest premium, because we know that either option that they go with, we're going to be comfortable with.
We often say the same thing to clients. It's first and foremost, it's about understanding the right amount of cover that they need, getting the right policies that we're looking at, having a look at what's available in terms of policy definition, strength of payout ratio, and then probably lastly on that list is the premium. And if we tick all of the boxes at the start, premium becomes a lesser and lesser issue. But obviously affordability is always something that we're leaning into with clients, because that then, I guess from our perspective, takes money away from things like investing and wealth creation. So it sounds like a really similar sort of process that you go through with what we go through when we're talking to. One of the other big areas that I think is probably understated in using an insurance broker versus the direct channel is what happens in the event of a claim. And what's the claim process that, say, I would go through as an individual direct client, which I've had some experiences with that before, and that's a pretty poor experience. If we went on a podcast that used some more colourful language to describe that, versus an insurance broker. Can you just run us through sort of what the difference is? And I think there's a huge amount of value there for people that is probably understated.
Huge. That independent mediation, you're going direct to an insurer. You're battling a very large company and somebody who doesn't essentially really care. They know that you've been a client for a long time, but they can fall back on some, and I mentioned the word ambiguity within the policy wording. So they do from time to time find holes within their policy wording to get out of paying claims. That's where your broker then will come in and kind of reverse engineer that and say, well, it's not defined properly within the policy wording saying that it is excluded, therefore we define it as being covered. And I've seen this multiple times where claims, it's really on the fence as far as the way we review it, whether it could go either way. But then that's our job, to conduct a really in-depth review of that policy wording and then come forward with a proposed solution to the insurer. And, you know, being part of an insurance broker that have worked with insurance companies for years and years, and I probably should have mentioned this earlier, for example, Howden placed nearly $20 billion worth of premium into the insurance market, and that has depth. When we're negotiating with insurers, we've got that clout behind us. They know who we are, and they're also tentative that they don't want to lose business moving forward from us. So whilst we're not trying to strong arm them into making decisions, they know that there is a larger relationship at play.
Bit of a difference when you're talking billions of dollars of premiums versus Billy's $1,000 insurance premium and saying, I want my money, make sure you pay me out. Yeah, completely get it. Yeah. And also just the stress associated with it. And it's probably not as simplistic as this, but you'd hand it across and say, hey, we've got a claim or a potential claim. Here, Mr. Insurance Broker, take care of it. That's kind of it, as opposed to ringing them up, jumping through all of the hoops they push you through. So there's a convenience factor associated with it too.
That's right. And there's nothing worse than having back and forth with an insurance claim. And I'm sure nearly everybody out there has some type of story. And, that's again, your broker's job is to collate all that information regarding the claim, and they can ask you for additional information from the get-go to put forward a claim submission to the insurer and cover off all angles, rather than waiting for them to come back and ask for more and more information just to drag out the process, which is just painful.
We've covered off on a lot of the benefits that come along with going with a general insurance broker. Obviously you're offering a wide array of services, you're offering a fairly comprehensive package, but, how do you get remunerated in all of this? What's the flip side of it? People paying more by going through an insurance broker? Do you charge a fee for it? What's in it for you?
Well, everyone needs to be paid for their services. So let me just start with that. We do earn a commission. So that commission is attached to the premium, and that commission does vary on the product class. On average, I'd say between 10 and 15% per policy. And then the broker will then apply a broker fee or an admin service fee. That's fully disclosed. So when we're putting together a proposal to a client about our services, that's going to be fully disclosed on all documentation or on the invoice as well. In some circumstances, what we will do is we'll ask for insurers for their premium terms net of commission, and then just look at charging an annual service fee. So there is that option as well. And a lot of clients don't know that that is an option. And the reason we do that is if they've had, for example, some large property claims and we know that their property premiums are going to go up significantly, but we can still be competitive on their other lines of insurance, we can't justify charging or recouping a huge commission based on an inflated premium. So then we would try and bring it back down to level by just charging an annual service fee rather than attaching a commission to those inflated premiums.
I think that's a really sensible approach. And I think the first thing that you hit on is, everybody needs to get paid for the work that they do. And the value exchange, at least what you've described to us in the short half an hour that we've been talking, but the value exchange of getting this right versus getting it wrong is absolutely poles apart. And from my mind, it makes absolute sense that, you get what you pay for. Because if you get it wrong, you're talking about some pretty catastrophic losses, which is what insurance is designed to prevent from a financial perspective. So, yeah, get what you pay for, and you pay peanuts, you get monkeys, right? So, yeah.
That pretty much wraps it up in terms of what we wanted to cover off on the episode. So, Brenton, on behalf of Billy and myself, wanted to thank you for coming in, sharing your insights and passing on the wealth of knowledge that you have onto our listeners. So, thanks very much for coming in and really, taking us through this kind of murky waters of the general insurance space.
Thanks, guys. Really enjoyed my time here and having a chat with you guys. I know, as I mentioned earlier, insurance can be a pretty dry topic, but I think we've really honed in on some important topics and given people some food for thought.
Hopefully we've done it some justice. And to our listeners, thank you once again for your attention. Hopefully you got a fair bit of value out of today's podcast. If you need any more or want any more information about Brenton or the business that he's involved in, details are in the show notes, so reach out. And thank you once again. We'll catch you on the next one. Thanks for listening today. If you have any questions on what we talked about or would like to have a chat about your money journey, visit us at 360fs.com.au.
Just a reminder to our listeners that the information contained in this podcast is general in nature and it is not intended as personal recommendations for the audience. Please consider whether the information suits your circumstances before acting on it. This information is provided by Billy Amaritis and Andrew Nicolaou of 360 Financial Strategists Proprietary Limited, authorised representatives and credit representatives of AMP Financial Planning.